Okay, 1 minute to 6 o'clock.
Our recording started.
Okay, start recording.
Okay, now that message said everybody's in listen-only mode, but I can hear
I will
everybody.
explain. I will explain. No, listen-only mode for the guests.
Oh, okay.
I will explain. Yes. Good evening. Welcome, everyone, especially to our guests. We have 2 guests at our meeting today. I'm the president of the Virtual Investment Club of Sacramento. I want to let you know that guests, you are not able to see your names, any information on the screen, and attendees or any member information. The reason is that because this club is open to public. So by showing your name, other people also can hold over to see your emails. So we want to protect your personal information. That's why that you are not able to see any other guest names there, including yourselves. Secondly, I want to point out that by default, we muted attendees, the guests only, we muted you during our meeting. However, there is the portion of a guest questions, comments portion of the meeting where we'll open the mic to all the guests. You can ask questions and give comments at that time. So we start our legal disclaimer. Better Investing is an education and nonprofit organization. The intent of our investment club is for us to learn how to research, analyze, and invest in quality growth stocks over a long-term investment horizon so that we can successfully maintain our own stock portfolio. The stocks that we present today are not a recommendation of a buying or selling. It is for educational purpose only. So you make your own decision for your own portfolio. So guests, we would love to hear about your comments or questions. Please save them until the end of the guest portion of the meeting, as I mentioned earlier. So let the fun begin. First of all, we have a new member, Henny Michael. He is our new addition to the family, and we're so excited to have you, Henny, on the team because your background is just, your bio looks amazing. You are in nuclear power engineering, and your engineering background also doing a lot of finance, have a lot of knowledge in financial aspect. We're so glad to have you on the team. Welcome to Virtual Investment Club of Sacramento. Next is Treasurer's report. Roy, our treasurer, is now here today. He is on the way to Middle East in San Francisco Airport. So Joanne is going to show us the club portfolio.
Hi. Tom has set up a nice portfolio on our Morningstar account. And this is showing, we have under my view, I've set it up so we can show our unrealized gain loss in dollars and our unrealized gain loss in percent since the purchase of the stock. So far, we've been doing fairly well. CVS and LKQ are relatively new stocks that we've purchased. They're down at the moment, but hopefully will start increasing in value. Five Below, when we first bought it, I think it was almost like 10 months ago, maybe 9 months ago, in June. The stock wasn't doing very well. It was actually down. And then lately there was a press release that said they were opening up, I believe, 9 stores in Southern California. So it's taken a bump up, and we're now even with our original purchase. We also had discussed, I think at the last meeting, is having a benchmark for how well our stock is doing against the general market. So Tom set up a where we every month when we purchase that $1,000 of a stock, we also purchase, or not purchase, but we reflect $1,000 in the Schwab U.S. broad market, so we know how we're doing against the U.S. broad market. So I guess currently we're ahead. So,
we'll beat the market by 6%, I believe.
Yeah.
Is that right, Tom?
How did you figure that out? Did you just do a manual calculation, or do we have that somewhere?
Well, I just did a manual calculation. I did it a couple of days ago, And I just compared the 9100 here to the 89 or whatever it is on the other screen, and there's about a 6% difference.
Okay, very good.
High finance.
Yeah.
Yeah.
And also, did we figure out how to do the
Dividends.
dividend? Because I see on the right there, there's a for dividend, or there's a dividend amount. So that is getting calculated in. Is that true, Tom?
I do not know about how we're doing dividends.
Okay.
I didn't know that we had made a decision. I guess, what we could do is, go back in and make a purchase. If we get like a $50 dividend or whatever, figure out how much of a share that is, and then add that into our total.
Okay.
That would probably be it's kind of laborious. Well, we don't have that many stocks. It's kind of time consuming, but it's possible to do it that way.
I believe we made a decision last month that Morningstar allow us to add a dividends. I think that's why there's dividend amount. However, I have not looked at the details if these numbers, dollar amounts, correct. We can take a look.
Okay.
Yeah.
Okay, I guess between meetings we can do that. Okay.
Yeah. Okay, we're doing good.
Now, the next topic goes to Tom.
Tom, the education topic. Our education topic today is Tom is going to talk about value line, and we have some new members to the club, and they are could be new to value line. So Tom's also going to show us about how to look at the value line compared to what we do, because we use value line as one of the resources a lot of time to look at their projections.
Okay, can the group see my screen?
Yes.
Okay, so I'm going to talk about Value Line. This is the Value Line website that I access through the library. Sometimes I have trouble navigating to this particular page. This is where it opens when I go to the library, but that's the URL up there at the top that shows when I'm on this page. So anyway, Value Line has two editions. It's got a large cap edition, which contains 1,700 stocks, and then it's got a small and mid cap edition, which I have access to through the library, but we're not going to look at that. They have much more detailed information in the large cap edition, and they cover 1,700 stocks. It comes in 3 parts, cleverly labeled 1, 2, and 3. Part 1 is what they call summary and index, and they list market statistics. Right now, they say that the median stock, or the overall of the 1,700 stocks they cover, have a median appreciation potential of 35% over the next 3 to 5 years, which works out to an annualized rate of 7.8%. If you figure that's a 4-year average period. That's 8 years ago they figured the market potential was 185% over that same time period. So the market has come a long way since then, and they're figuring the market is pretty much at its recent high PE of 19.6. They also have some screens. Each week they release a bunch of stock screens. Here's a list of what some of them are. A couple examples: timely stocks and timely industries. Their definition of timeliness is stocks that are likely to go up in the next 6 to 12 months. And so these are what they consider the most timely industries. The industries are ranked, and then they rank stocks within the industries. I didn't really, this might be a source of ideas in the future if you're interested. And then here's another screen: stocks with high 3 to 5 year price appreciation potential. Note that the top one is 460%, and the bottom is 125. This is the 100 stocks here. I looked through these and I couldn't find anything that looked really interesting to me. But there might be some in there. I think there's kind of my opinion, there's stocks that have, the price has gone down for some reason, like maybe they're having some sort of trouble. And so that's why the price is down. And so by, if they're having trouble, then they could be, more risky investments. So part 2 is what they call selection and opinion. Here they do economic analysis and market commentary. They also have some model portfolios. And Value Line, they publish a new issue. It's dated every Friday, but actually it's released every Monday. So I was able this morning to pull down the April 21st edition, just to see what they said about the economic conditions. And they say the market, down here at the bottom, there's clearly challenges for the market. But, they think that if company earnings are okay, we're headed into earnings season, and we don't have big global tensions, a big war breaks out somewhere. They think the bull market is probably intact. But they say that due to the high PE, there's reason for caution. And also, last week's edition said about the same thing. They have a cautious outlook. Risks and rewards are largely balanced. Here's an example of one of the model portfolios. This is stocks with above average year ahead price potential. And there's a lot of familiar names on here, large companies that are solid. I put those 20 stocks in a manifest investing dashboard and rank them by potential average return according to Mark Robertson's criteria. And there's, the ones that came up to the top seem like reasonable investments. I think they're all suffering. I don't know about Discovery, but I think Infosys, CVS, and AutoNation might be facing some challenges in today's market. But if the price is down, then their potential return would be up. I don't think they're bad companies, but the share price is down for whatever reason. Then moving on to part 3 here, ratings and reports. Now this one that's labeled here is kind of like an electronic version where you can pull in information. This other one here, this ratings and reports, is standard. This one you get the like the PDF of what you would get in the library, the third section. And so in this part, they rank stocks. They have rankings for timeliness, safety, and technical criteria. And the ranks, 1 is the highest rank and 5 is the lowest rank. And for timeliness and technical rank criteria, they sort of make their own bell curve where the highest and lowest rank, 100 stocks are assigned to that portion. And then the second and fourth rank, there's 300 stocks. And then the middle rank, there's 900 stocks. For the safety criteria, they don't have a fixed number. They can have, any number, depending on the stock's financial strength, really. So to discuss timeliness further here, so timeliness, like I said, was expected price performance over the next 6 to 12 months is their definition. And so the ranking criteria is recent earnings growth and positive earnings surprises, recent price performance relative to the universe of stocks they cover, there's 1,700 stocks, history of earnings growth exceeding share price appreciation, which would be PE compression, because we BI investors like that. If we can buy stocks at a low PE, we like that. So for safety, they measure equal weight to the financial strength and the price stability of the stock. So financial strength, A ++ is the highest, down to C is the lowest. Price stability is 100 is the highest, and 5 is the lowest. So for Biogen here, which is my example, the financial strength is A, but the price stability is only 35. So that translates into a safety ranking of 3. For the technical criteria, they say they use a proprietary model, which means it's secret. And this predicts 3 to 6 months relative price change. and they say this is best as a secondary criteria. And BI investors don't generally worry too much about technical analysis, so we don't probably don't pay too much attention to this one. Capital structure, there's this capital structure box. We look at how much debt the company has. BI recommends a debt load of less than a third or less than 33%. Biogen's pushing the envelope there with 35%. And interest coverage, it's generally accepted greater than 1.5 is good. And that's the definition. Interest, earnings before interest and taxes divided by interest expense is how that's calculated. So Biogen's interest coverage is a little bit over 1.5. So they're fairly highly indebted, but they don't seem to be, I guess, in financial trouble. Okay, so here's some more information about navigating the website for Value Line. Here, if you click on this Browse Research tab, then you can enter the stock ticker, and it will bring up this screen, and it will show you the most current information they have on the stock. You know, sometimes they update it weekly. Some weeks they don't change anything, but since it only comes out 4 times a year, it's possible, or the paper edition anyway. It's possible that some of these rankings, you know, like safety, timeliness, or financial strength, could change in between. You can also access the PDF reports for at least the last year by clicking on this little box here. One thing I was playing with this, notice when you, on the live screen, if you put your mouse over one of these little boxes, it'll pull up a company. So I looked at what's the most timely stock in the drug industry, and they showed Endo. And this is Endo's price chart, you know, as train wreck. But they, from their information, they are saying that, you know, the company's facing problems, which they think they're resolving. And so they think, you know, it could be a risky investment, but it does have good appreciation potential. So that's why they're listing it as timely. Okay, now here's where we get to the origin of why did they call it Value Line. So this solid line here is the cash flow line or the value line, what they considered the value of the stock to be. Okay, and so their definition of quote unquote cash flow is different than the traditional accounting definition, which would appear on the statement of cash flows. Their definition is net income plus depreciation and amortization minus preferred dividends divided by shares outstanding. So that gives you the cash flow, and then they multiply it by a factor which is different for every stock. So higher PE stocks get a higher multiplier. So this particular stock here, they give 17, and they consider that to be the fair value of the stock. And then also these little bars here represent the monthly price range of the stock. So you can see here coming the dark areas of recession. So coming out of the recession, you can see they figure the stock is well below its fair value. And then a couple years out, the stock trades above fair value, then it peaks quite a fair amount above. Now they're considering it's trading below what they consider to be the fair value. And so, you know, and this is their target. Target price for the stock is over here, which I think is like 360 to 540, which shows up here in this box. So I guess that's it for that one. Another thing here, one thing I've been looking at Value Line for years, and I've never been able to reconcile figure out what's the right word here, these annual rates with these projected figures that they give out here like 5 years out. So I contacted Value Line, and I was a little surprised, but I got an email from a person who told me how they did it. So they're what they do to make these calculations. This is they like we'll do sales per share first. I'll show the example. They average the values for 2013 to 2015. So for sales per share, this top line here, average, take these 3 values, add together, divide by 3. The result is then compared to the 6905. And then I forget the 7-year time period from 2014 to 2021. Put that in a financial calculator, and that gives 8.2% compound annual growth. And that compares to their 8.0%, and they round to the whole or 0.5%. So that's, that gives their result. The same thing for earnings per share. Average these three figures, compare it to the 2250. My result is 9.6. Theirs is 9.5. And then for sales, I average these three figures, compare it to this figure over here, gets 6.1. Now notice these are all sales per share. So their shares outstanding are between 2014 and 2021 are decreasing over 15%. So that's why the earnings per share and sales per share are increasing faster than sales, because there's like 15% less shares. So I decided to make, just for the fun of it, make a stock selection guide here using their values, their projected values, and see what happened with these annual rates. So in order to make this stock selection guide, I put in earnings of 2250, and the closest I could get was 2255. And then that showed only a 3.8% increase. Like if you're making this straight line projection, which they say that's not what they intend. They don't intend these as straight line projections. So anyway, 3.8% projected off the last quarter gives us their 2255 figure. And then for sales, I got pretty close to 13.8 billion. And that translates to 5.9% sales growth. Estimated, when you do the stock selection guide, or when you project off the last annual figure or last quarterly, whichever. I think they're probably the same since this is the end of the year. So then I took these other figures, it's 8% and 9.5% sales and earnings growth, and did plug those into another stock selection guide. So if we use the 8% sales growth, that'd give us 16.8 billion rather than 13.8 billion for sales 5 years out. And for the earnings, using the 9.5% growth, that'd give us 2665 versus 2255. So, traditionally I've always thought, well, you take these figures, plug them in, and that's what we get. But sometimes these figures, I think, might be a little optimistic, especially for this stock, since they're per share and they're buying back so many shares. Also, I used their PE ratio. Like they're figuring an average PE ratio of 20. So I just figured 25 and 15 average to 20 for the projected PE. And that is probably pretty high, considering the PE, high and low PE last year was 18.2 and 12.1. So anyway, this, compared to the stock selection guide, the club has our consensus SSG. This is a couple percent higher because the PE is so much higher. The earnings are lower, but the PE is higher. So this is overall, this still is showing a little bit more optimistic result than the one that the club has agreed to. But I'm just wondering about, if earnings are slowing, how it can maintain that 20 PE. So here I just, again, for the fun of it, and because it was, there was a new value line came out. When I started this presentation, all I had access to was the January, but in the middle of it, the April came out. So I compare what these figures are. So they're, in January they projected 79.55 sales per share. 3 months later, they're predicting $10 less. Earnings, they kept the same. Sales, they are projecting, I guess, a decrease in sales from 15.9 billion to 13.8 billion. Let's see what else here. These earnings, in order to make everything work, their profit margin, I guess, and 3 months ago they projected the profit margin would decline. Now they're projecting the profit margin will stay the same. And I also thought it was a little interesting. They're 3 months ago they thought the company would earn $18.95, but these are the actual results are $16.93. So they were a couple dollars high on their earnings forecast. And then this just shows between January and April what their projections are. They're still projecting the same high and low price for the stock, but they moved it out a year rather, 1 year in the future. But the projected sales are down by quite a bit. And also earnings a bit down quite a bit. So they're having definitely a less optimistic take on the stock now than they were 3 months ago. So that's the end of my presentation, really. Does anybody have any questions?
Hi, Tom.
Very
Joanne.
good presentation.
I have
Yes.
a question. So if the sales are decreasing, how, that last page there, and the estimates are lower, how do they expect the price to be the same?
Good question. They're figuring the same. Well, they're still figuring the same earnings per share. Because they increased the profit margin, but that's a little bit. And also, they're decreasing the amount of shares outstanding, so that's going to boost earnings per share a little bit. But I would, I guess I have to dig into that a little bit further. And I'm going to, I'll see. Next month I'll see what I can figure out, because they're releasing earnings this in a week or two, and next month I'll be doing a report on them.
So do you recommend that we go with how you calculated the estimated sales and estimated earnings, based on the dollar amounts versus their percentages? Do you think we should?
Well,
I mean, it seems really different.
it certainly is.
Not very
And
close in my mind.
it's kind of a shocker to see that, that all these years I've just been going by, well, what's, you look at all these people and they say 5%, 10%, 15%, just stick that number on the end and let it go, and use the last quarter, because the last quarter is supposed to be the most accurate. So I think we should I don't know if there's really like a yes or no answer. I think maybe we should really try to dig a little bit deeper and see, if we can have a more thoughtful answer than just, these straight line projections. If you just take one data point and then apply a multiplier to that, it can just, especially if that point is, especially if it's up or down a little bit, especially if you're doing quarterly figures, that can throw your figures like way off. And one thing, what I have up here now, this is their like, look at earnings. These are value line projections for the earnings of 2017 and 2018, and it looks, but their 2021 figures not much higher. So it looks like they're expecting it to really flatten out there. So I don't know, but I think we should definitely consider those numbers rather than just blindly plugging in a value and thinking that that's what it will be in 5 years out.
Mm-hmm.
Makes sense.
Yeah, agree. Yeah. Any other questions? Henny, Matt, do you have any questions?
No, that was informative.
Yeah, I really enjoyed that.
Yes, I learned a lot. What about you, Henny? Do you have any questions?
I haven't heard Hanny's voice. He's logged in. I wonder if he's with us.
He is with us. He just unmuted, but yeah, maybe
Maybe
he has.
his speaker's not working. Okay.
Right. Okay. All right.
So Tom, you can
So
go back to me
yeah,
while Jay's talking.
thank you, Tom. That was a really good
Okay,
presentation.
you're welcome. Thank you. So go back to Joanne.
Yeah, just click on
Yeah.
me.
So next
Okay.
month, actually, Henny is going to give education topic talking about impact of exchange rates. Since he resides in Canada, he mentioned that he's very familiar with this subject. So Henny is working on presentation.
Oh, sounds good.
Right. So he's going to give us education topic for next month. Stock study. Joanne and Matt is going to talk about
Well, and actually,
retail specialty.
yeah.
Go ahead, Joanne.
Okay. Hi. Actually,
Hi.
when Matt and I looked at stocks for the month, we had gone through kind of several iterations, and we came back down to challenging 5, which in the past has not done well for us. We've held it, for many months, and it seemed like the stock wasn't performing. So we thought we would challenge it, and the industry is specialty retail. And what's interesting about specialty retail is that I believe it's a Morningstar, Better Investing uses categories. So when you do like a search for stocks, you'll find both of these stocks that we selected under specialty retail. If you go to Value Line, they end up in different industries. So mine is actually in retail industry. So just kind of a brief overview of the industry. The industry is, I think, ranked number 18 in the Value Line industry list, although retail establishments like Sears isn't doing very well. Nordstrom's, Macy's, unless they can move with the current, I guess, demand for online purchasing, they're experiencing real ups and downs. And so as a consequence, Five Below, when the retail industry as a whole suffers a negative impact, then Five Below, and I don't really understand this, but they also get, I guess, the Wall Street or the general investment community pulls back. So Five Below has had a kind of a rocky, just investment history. I mean, if you look at their stock price, just recently they sent out a press release that, I believe it's April, I think 21st, they're opening up 9 stores in Southern California. So the stock, we're just at, we just, the stock came back, so we're even now. I'm not, so I'm going to go through the annual report they just released their annual report in March. So they're on a January fiscal year. So they met their sales growth is around 20%, and they met that. The previous quarter, they did not meet their expectations, and they were attributing that to weather and the election. And apparently, I think it's something like 60 or 70% of their sales is achieved in the holiday quarter, the Christmas quarter. And so they managed to meet their expectations for the quarter, and then you could see a bump up in their stock for that. So let's see so let me see. Let me try to go through this. So they identified their challenges as being able to respond to because they call what their model is like fast fashion or trend fashion or trend marketing. So when something becomes trendy or current, they purchase big amounts of that, and then it's gone, and then they're on to the next thing. And kind of a lot like the fast fashion of H&M and Zara and those type of models. So they claim their differentiator is that they feel that they're unique and that they are able to change trends according to customer preferences. They locate their stores in college towns or trying to appeal to a younger crowd. Oh, and they also locate their stores in strip mall type venues. They say one of their
What's their age group that they're looking for as
they
customers?
say teens, but I think it's not like preteen, but probably more the 18, 19-year-olds.
Okay.
17, 18, 19. I don't know. I've never been to one. Matt may have been to one.
Matt's supposed, yeah. Matt's on mission to visit one. Matt, give us a report.
I'm still waiting for the right opportunity to go buy something there. I haven't found it in the last 6 months yet. So.
Oh, okay.
Well, you're not
just go for a field trip.
Yeah.
Yeah.
Okay.
I'll go out on a Friday night or something.
Okay. Yeah. So they are opening 100 new stores, and they're opening up in California. Whoops. Let's see. Sorry. I don't believe that this company can meet my expectations in the near future. They're investing heavily in infrastructure systems and expanding into different geographic areas. Okay. They are heavily dependent on seasonal sales, with the highest percentage of sales, approximately 40%, occurring during the fourth quarter. So if something happens in that quarter, it's in November, December, January. Also, investor sentiment is wary of the retail market, and Five has been impacted by some of the pullback. I think Sears is really suffering. And one of the reasons why is because these stores aren't, people want things now. It's like kind of the on-demand economy. So if somebody wants something, they want to be able just to purchase it now. But the problem with Five is that their the purchase amount is so small that it doesn't really translate into being able to buy online because everything's $5 and below. So just being able to handle online purchases with the shipping and all the handling. One of the things that I didn't like about them is that in their annual report, they said their marketing strategy was newspaper circulars, television, digital, and grassroots marketing. And I believe for the teen market, it's all online. It's all viral marketing. It's, the YouTubes, the influencers, the people who, there's like celebrity kids online that have just created their own YouTube channels and that are promoting products. And those are the people they need to be targeting. But I don't know if they don't see that, or because I don't know any teenager that reads newspapers. And
I kind of agree with you on that. Yeah, we understand that part. Mm-hmm.
So so I feel like it's kind of a wait and see for me. We can hold on to the stock, but I'm not impressed by their marketing strategy so far. We'll see how well they do. They have this big opening going on in Southern California with the 9 stores. So
does that mean they open a new distributor center in California?
I don't think so. They didn't.
But how do they ship the stuff from East Coast to Southern California?
That's a good question. I think they just truck it in.
Wow, that would be so expensive.
Yeah, another point.
So they did not mention open any new distribution center.
Not that I read. No.
And early on, you also mentioned about how the election impact their performance. How does the election impact the store, the teen store?
They brought that up in their conference call.
Uh-huh.
But they didn't elaborate on that.
Okay, I'm just curious. Yeah.
Maybe people don't want to spend money during an election year.
Yeah, I heard that for a few companies that said that. I don't understand it either. I think it's just a standard excuse that they use when things aren't as good as they wanted.
I would tend to agree. And also, I'm wondering, it said 100 stores. How are they going to finance all these new stores? That must cost something.
They have no debts, that company.
Yeah, they use credit, and then they pay.
Oh,
Yeah.
they use credit.
I don't.
They also, I read, can you guys hear me, by the way?
Yes, we can
Yes.
hear you. Finally, Henny, go ahead.
Oh, okay. Yeah, I took my headset off.
Oh,
I read somewhere that their profitability on the stores is quite good. So they can get something like 1 year return on the investment for new stores.
Wow. But I guess they don't own the store. They must just lease it.
Oh, they.
Yeah, but the
Probably,
investment, I guess, would be in inventory and so on.
Okay.
But they're, I don't know what their same store sales are like. That's something maybe we should look at.
Same store sales. What does that mean? Same.
So, like you have sales from the opening of new stores, which adds to, which adds to which increases their overall sales. But the existing stores, most retailers will look at how much each store is selling year over year. So if a store is increasing its sales year over year, that same store, that's a good sign. If their same store sales are going down, it shows that they're not doing very well. So they compare the sales of individual stores year over year versus new stores that they open.
So even though they're maybe opening new stores, and it's the overall picture shows an increase in sales, you really want to get down to the same store sales level to really see what's happening.
Yes, if that's increasing, that's a good sign. If it's not, if it's staying the same or going lower, then the only way they sales is just by opening more stores, which is more difficult to do.
Okay, got it. Thank you. So let's take a look at. Let's see. I'll take a look at the SSG.
Looks pretty good.
Well, okay. So I crossed out 9, 10, and 11
Okay.
because it really skewed the numbers. I mean, because they had a negative
Okay.
EPS, and I didn't feel like it really kind of portrayed going forward. So let's see. Maybe just that one. Okay. So, and actually their growth has averaged about 20% in the last couple years, and that's their goal, to be 20%. I chose 18% to be a little less. And then if you look at their value line, just going by, now that I know that we can't really go by the.
there's no value line. See that? The solid line is not there.
What does that mean when there's no value line?
I think this stock is new to value line, and maybe they'll add one later on.
Okay. So their sales is 18.5%, earnings estimate 19.5%. But so I want to look at what you said. So like they're estimating their sales per share at 35.10. So if I look up here, can I see it from here?
Yes.
But I can't
You're
see.
looking at it.
Well, see now you're looking at sales per share. You're not looking at sales.
Well, okay. So if I look here,
sales is in the middle.
the sales down here.
They're working at $2 billion in sales.
Billion. Okay. So then if I look at my SSG at 18%, it's like 22.89.
Yeah, to 2.3 billion.
Yeah.
So that's a difference.
How
about EPS? How about EPS?
Okay, so my EPS 2.97 and theirs is no.
It's the third item down,
Oh,
275.
yeah, 75. What was mine?
It's 290 something.
Okay, so I'm still a little high. I guess I could go. I mean, what would you do now that you know about these figures?
Well, I think I would go a little more conservative, but I would
Yeah.
probably also look at other resources, see what other, if I could find any other references, any
Okay,
other
so
analysts.
I asked her that question. She showed us that look like they all projecting pretty high, like a 20 or 19, right? Yahoo. What
yeah,
others? I can't remember what other resources you're looking
well,
at
just
it.
even the BI estimate here is 19.4.
That's just 2 years though.
Yeah, but
That's Morningstar.
a lot of them don't give a most. Now, I don't know. Does anybody know where they can find a long-term?
Yes. You go up to your screen, say research,
Go up to the top of your
upper
asset.
top research,
Uh-huh.
and then analyst estimates. And then these, when you click, it will take you to that. For example, like Zach or whatever, you just pick one of them.
But many of those are
I never
2-year.
find the for sales. I find it for EPS, but I can never find the 5-year estimates for
I
sales.
think sometimes Morningstar, click on Morningstar.
Click Morningstar, second one, yeah.
Oops.
Oops.
And then go down a little bit.
PE sales right there. They're 28.5. 5 years gross forecast. Oh, they didn't say. That's PE. Okay. What about in the bottom? Did they say any? This is already bottom. Okay.
Oh yeah, there's a box for
Okay.
it, but they're
5
not
year.
projecting it.
They did not project. Yeah, they did not project in this one. To find a different
What are you
company.
guys looking at? A
I'm
5?
looking at the forecast. 5 years gross
But
forecast.
below the red and green there, it says forward comparisons.
Oh, okay.
And it says 5-year
Yeah.
forecast, and the box has a dash in it.
Right.
So
But this company they did not project.
that's
Find a
sales.
different one. X this one. X out, and then find a different company. Oh, sorry, different analyst. Sorry, I mean, excuse me, different analyst.
What did you say?
Find a different analyst.
Oh, find
Yeah,
it.
go back to the top.
X that screen.
X the screen.
Or go back to SSG, whatever your choice. Because they always open new screens, so I don't want to get too many tabs
Okay.
open. That's
All
why I
right.
ask you to. Yeah, go ahead, research. Click on research. Highlight research.
Uh-huh.
Analyst estimates. Go NASDAQ or whatever. But this is not really NASDAQ. Oh, okay, NASDAQ. Okay. Just curious to see.
I think I went through all these and I didn't.
Oh, you didn't
Morning-
find it. Okay.
I think Morningstar is the only one that gives a 5 other than
here.
Yeah.
Value Line.
Yeah. For this one, I don't believe is in summary. I think it's. I don't believe it's in summary. I don't remember. Earnings, that's earnings growth, right? Forecast. Click a forecast. Yeah. Okay, let's see. Doesn't really have earning per share. Is that earning per share? What is it?
Earnings per share.
Yeah, earning per share. Yeah, NASDAQ, I don't know where they're located. So I usually just look these analysts to find a one.
Yeah.
You're right.
I couldn't find it, but anyway. So
Yeah.
And maybe 5 is just a new company.
Right.
So
what if? Yeah, I do believe. I also felt that 18 is quite optimistic. What if we just do a little bit lower, see what happens? Like gave 15 or 16, what happens? So for earning per share,
I think that's
what do we give?
yeah.
Okay. 18.
That's more in
What
line.
does the
with-
what does default procedure say? I'm just curious.
So yeah, they said 2,000. Oh no, that's Tractor Supply. So what were you saying?
Oh, I was saying for the preferred procedure, I'm just curious,
Oh,
what does preferred procedure say?
Preferred
Oh,
procedure
15.
is
Okay.
based on the sales. So whatever you put
Okay.
in for sales, it's going to put out the. So
Right. So they have, okay. Expenses has changed. Okay. So,
let's see.
oh, they do have all the debt. So wait, what do you mean by they use a credit? So 2013 have that, and then what do you mean by is a credit? Is credit is a debt? Does credit
But it's
consider
not
debt?
long term. I don't think it's considered long term debt.
Oh, okay.
It doesn't show up
Oh,
in
okay.
their
Okay.
financials.
Oh, okay. So Carol suggests that look the BI member settlement. Go on top the research.
Uh-huh.
Go on top. See what other BI members, what numbers they give.
Where do you see that?
Member settlement. Where did they go? Member better investing research, better investing. Third. Oh, okay. See what they give on the sale. A lot of people give 15. Seem like they'll give about 18. Pretty high.
A lot of them, I think, are using the 18.5 is from Value Line.
Yeah. Okay. Okay. All right. So let's just see what 15 gives us. Are we cool? Give 15,
I am.
guys?
I am.
Okay.
Okay.
Okay. All right.
And then, okay.
Their return on equity is down though, quite a bit, down 30%. Sorry, I just caught on the return on equity.
Then
Okay.
I took out the 2012 no meaningful
Right.
data,
Yeah.
and then 2013, 2014 are way
Yeah.
off.
Right.
So it really only gives
Yes.
2 years of and then I picked
You
well,
picked 27, 1.5 times the. Yeah, I like the number you have here. So now we need to change it 15 times 1.5, right? So 22.5? We're still using 27.
I think that 27 is higher than the low PE, average low PE. Do you know? So I don't know
So
if I want.
initially you picked 27. I read your first cut. You said reason why you picked 27 because you used 1.5 times earning per share,
Yeah,
right?
yeah.
Yeah.
But now I'm thinking I don't want to go. I mean, lower than.
Go on really lower. No. Okay.
I mean,
Yeah.
do you think we should go lower?
No, I think it's fine. And initially I was looking at your reasoning. I was like, oh, their PE so high, like a 30, 40, and then you give 27. Then I looked at your justification. Actually makes sense to me. I think probably
Well, we
okay.
could go to
Maybe
20.
even
Well, one and a half
maybe even
times,
30, maybe.
1.5 times is 22.5. I
Yeah.
go as high as like 2 times,
Mm,
so it would be like 30. But
30. Yeah.
you want to try 30?
Because average PE is 32, current PE is 34. I think a 30, yeah, reasonable. Try 30. Yeah. Okay. So, okay.
And then selected low forecast.
Yeah. Right.
I based it on the calculation.
Okay. So 52 weeks low is 35. You have 32. I think it's good. Yeah.
So what's the high and low PE?
High PE we give 30.
Okay,
Low PE we just take the average.
The 25.2.
25. Did you really think it's only going to go 5? The high and low is only 5 points apart?
Their high PE is super high. I don't know. Yeah, I feel like as the company like this don't. So what do you suggest, Tom?
Well, I think there should be more difference between the two. Either raise the raise the high or lower the low or both. Maybe
So you think the low price is going to go lower than this?
to me, a 25 low PE seems reasonable, just looking at the history. Maybe, you know, if it's 30 seems like an awfully high PE, but it's traded. This year it was between 33 and 45, and previous years it's been even higher than that. You know, I don't think 35 would be unreasonable, but you know, it's by our criteria, whatever, we sort of want to stay away from things like that. But just looking at historical, I don't think 35 seems unreasonable. What does Value Line project as the average PE? You have the Value Line.
Yeah. Where do they put that?
Going down a little bit. Average. Oh wait, is that in that box?
Is it in
average,
it's on the right, isn't it?
Yes, it's over on the right. 29 is what they're figuring the average PE will be.
Average annual PE, 29.
Yeah.
Okay. Should we try that?
Well, 30, yeah. Well, 35 and 25 would give you 30.
Where did you see 35, 25?
Well, I was saying
I see. Got
if
you.
you're going to
Okay.
average, you
Got
put
it.
in 35 high, 25 low, average
Okay.
lows is 30.
Yeah. Yes. Gotcha. Okay.
So you could go 34 and 25.
What was that, Tom?
I said 34 and 25.
34. Use the current PE.
Okay,
34.
so I heard that going over 30 was kind of treading on thin ice.
Well, rules are made to be broken.
Okay.
No, we can, you know, I know, but you know, if you fix it at 30 and then you want to keep the 20, the low at 25, you know, it just doesn't seem reasonable to me that the PE is only going to swing 5 points over the next 5 years. That just doesn't seem like that's a realistic possibility. There's something wrong with one of the numbers or both.
So you think 10, if it swings 10 points, that's a little bit more.
I don't know, that seems more like reality, but you know, but 35 is an awfully high PE, but you know, it has traded, you know, I think it's what's the
What happens if we make the low, say, 20?
It hasn't been 20 for a while. You just want to put in 20? I don't think,
I
boy,
think a low PE looks fine because 52 weeks low 35, and we'll forecast low price at 32, about another 10% lower. But I think that this company high PE is above the normal, like it's high.
I think
So
the high PE is what's throwing it off.
okay, what's the current
Well, but
price?
if-
Can you go up a little bit? I don't want to be more than double.
If you look at the trend in PE, it's in 2013 it was 90, 94, 58, and it dropped by half. And you know, so if we did go to 20, that from 25, that wouldn't be too unreasonable.
I agree.
Wait, say that again. I didn't catch that last part.
He says that the PE trend is down, so maybe 20 is not unreasonable.
Oh, for the low?
For the low.
Oh.
Yeah.
What about for the high, Henny?
It's also dropping. So
what do you suggest?
Well, I think the 30 is okay, but I agree with Tom. Like there should be more of a spread between the high and the low.
Okay. Okay.
So let's put
20. What number do we?
We're going to put 20 for the low PE. That gives us a 26 low price.
Yeah. That will be a 2015 low stock price almost.
Yeah, 2015 low price.
Yeah. So, okay. Potential price appreciation 100%. Hold. It's on hold.
Well, that's kind of a weird, I agree with going down on the PE, but if we assume that kind of a multiple, then we assume the stock price is going to go down substantially. 52-week lows over $27, and we're projecting $21 in the future.
Wait, I thought we said high PE 30, not 35.
Okay.
Well, so what's our forecast low price? I'm doing it on
26, I
Toolkit
think.
on my
26.
computer here. What's our low price?
26.
26?
Because
Okay, so
we're doing
what's your low earnings?
the
Okay, yeah, 26 seems okay.
okay. So I mean, we're really giving it a super conservative review just based on our. I mean, compared to other, like if we look at, let's take a look at other members. What they. So they're saying, so we picked 15 for the sales, we picked 15 for the EPS. So
30 and 20.
yeah, so we picked 30, and so other people, I guess, are. I mean, we're not outliers. I mean, we're not unless this is ours. Is this ours?
I'm wondering if that's yours. I'm wondering that too. Let's look at some old ones. April. Look some older ones.
Well, if
Yeah.
it's day and it's our numbers, it's probably ours.
Yeah.
How are we doing on time?
Okay.
Yeah, we're fine. So let's take a look at the quarterly data, and then we call this.
Okay.
Yeah. Green with sales earnings overlapping. Okay. The sales consistent, not growing but consistent. Well, when I mean consistent, like kind of flat. Earnings per share going up, down a little. Okay. Okay. So based on current SSG, it's on hold. Do we want to hear what Matt is going to present, and then we decide what we're going to do?
Yes.
Okay.
Okay. So I'm going to close these. Okay.
Okay.
All right, Matt. Did you want to? What do you want? Oh, Matt, I'm going to do it to your screen.
Yeah.
Yeah,
Okay.
share it to me.
Okay. So Matt, how did you find a tractor? How did you come up with this company?
He shops.
Yeah. Well, I have shopped there, but that's not how I found it. I found it on Morningstar. I was just looking for competitors for 5, and it was a 4-star stock on Morningstar. So I said, might as well check that one out. And they were trading near their low too, so it seemed like a good time.
Yeah. So what happened?
Take a look at it. Well, recently, I guess before I get too far into it, they just they gave a business update. They called it just last week. It was on Wednesday or Thursday, I think. And they said that their earnings they expect to be around 45 to 46 cents a share, which would be about around 8 to 10% lower than they were first quarter last year. So that drove their stock down about 7 or 8%. Which has put it near the low now. But they have always said that they really only project 6 months. They don't really do quarters. So a lot of times I guess they end up making it up in the next quarter. So tough to say. But that's the latest news. That's as of 2 or 3 days ago.
Okay.
But anyway, Tractor Supply, so just to go through the first cut. So they're like a rural farm specialty retailer, so they're not really meant for like your full-time farmer. It's more for like people that have a little bit of land and they need fencing supplies or things for their animals. They have feed for horses and chickens and dogs and cats and all kinds of things like that. That's probably close to a third of the store, and then the rest is like tractor parts and various tools and hardware and things like that. So that's what they do, and they're the biggest store. So every little town, at least near where I am, has a Tractor Supply, and that's where you get all those kinds of things that people with a decent amount of land are getting fairly regularly. And you can buy lawnmowers and things like that too. So the store base, they've been growing a lot lately, but they've been kind of slowing a little bit in the recent past. Store base has grown about 50% over the last 5 years. It's 1,600 stores total. They just recently, at the end, I think, of 2016, bought this Pet Sense stores, which is just a pet store, a regional one. It's 136 stores, but they are adding to those too. They bought that. Oh no, it was September. They bought it for 116 million. So pretty small, realistically, when you compare it to the bulk of the rest of their sales. Historically, sales up about 11% annually for the last 10 years. And it's, like I said, it's starting to slow a little bit, maybe in the high single-digit sales increases. Earnings per share increasing pretty substantially to 24%, and then pre-tax profit 21, almost 22%, with a 10% pre-tax profit margin, which is pretty good. ROE has gone up. It was just under 26% about 5 years ago, and it's just over 29%. So it was up just over 30 there for a little while last year, but 29% now is really pretty good. And then the debt to capital, if you kind of look at I'll switch to SSG in a second, but it's increased, but it was basically zero, and it's increased about 17%. So really pretty low when you look at that. So just flipping over to SSG real quick, you can see that it kind of has that curve where the sales and earnings are slowing as they've gotten bigger and bigger. But they're still increasing their earnings, just not as rapid as they were before. And then the pre-tax profit, you can see down here, right around 10% over the last 5 years or so. Then ROE, again, around 29. And then the debt to capital, while it is going up, it's really pretty small. It's just within the last few years, which probably was a smart thing to do, is to take that on, while interest rates were so low, things like that.
Is that the 2015-16 because they acquired the pet store? That's why they have debt the last 2 years?
That could be part of it too. Yeah, definitely could be. But they acquired the debt in 2015, and they didn't buy them until the end of 2016. So it could be for a lot of things. Okay. So back to the first cut. So basically, how they make money, it's just retail. So they're buying the things from either wholesalers or direct from manufacturers, and then selling them in their stores. That's pretty much how they make their money. So livestock, again, pet supplies is the biggest at 44%. So sales-wise, it's almost half the store. So then hardware, tools, and truck and tractor supplies, another quarter, 23%. And then the seasonal gifts and toys, which that's just kind of rotating stock that they have, depending on, might be gloves if it's in the middle of winter, and it's probably gardening supplies, if it's spring like it is right now, things like that. So that's the bulk of what they are. And between those three categories, that makes up 64.
43, 80. So the rest online, maybe, or something? Yeah. 87, another 13%. Okay.
They also sell clothing.
You sell clothing too? Okay.
Yeah, they sell hats
So
and
this
boots.
is kind of unique. I don't think, at least in Northern California, I'm not sure, Sacramento area, we don't have stores sell livestock and hardware tools. Do we have that?
There are Tractor Supplies in Woodland and Dixon.
Okay. That
I've been
actually
to
makes sense
both.
in that area. Okay. All right.
Didn't buy anything.
Okay. You can carry on. Go ahead, Matt.
Is he there?
I don't know.
Oops, sorry, I hit the mute button.
Oh,
I did 7% growth rate for sales, and that was just based on their projections from their most recent annual report. They're projecting it was between 5 and 8%. We went with 7. That was the analyst's projections also.
So you use okay, analyst and a company. Okay, projection.
Right. Yeah.
What
so
does the value line say?
Their press release.
Any idea?
10.
What does
The value line is 10.
Yeah,
10?
value line is. Not sure where that is in here exactly, but
But
yeah, it's 10.
But Matt, your percentage is in line with the, if we go with what Tom was showing us as far as sales, actual sales dollar amount.
81.9.
You're in line with that because
Right.
9,500 or what is it? 90?
Yep.
Yeah.
Yeah. Okay.
Yeah. So that is showing kind of the slowing growth as well. Even though it's been 11%, we expect around 7.
Okay.
So
Whoever's
yeah, that's
typing,
based on their
please
full year
mute.
forecast.
Somebody's typing in the background. Please mute.
Yeah, mute.
So
Okay,
for the
got it.
earning per share, is you using a earning per share using 7%, but here you say 6.5%.
Maybe we switch back and forth, but
Okay.
you can plug 6.5 in there. We ended up just that's right. We ended up just making it the same as sales, the 7%. We figured why do the 0.5% difference?
Oh. Okay.
Yeah, so I could change it to say 7.
So Value Line has the earnings per share at 5.45, and let's see, your SSG has it at 4.59. I think maybe your percentage could be a little higher.
Could be what?
A little higher.
Yeah, it could be a little bit higher. What do you think?
Well, usually I like to keep.
Yeah, I just kind of picked the middle.
Yeah, I like to keep it in line with sales.
So what is it? What's the number, Joy?
What? I mean, okay, so his estimate is a little lower than what Value Line has as far as the dollar amount.
Uh-huh.
But I would go with his 7 instead of bumping
Just to be conservative.
instead of bumping the 7 up.
Okay.
I mean, you can see if it does anything. It might not even do anything.
Yeah, it's really pretty small when you start to play around with the earnings per share.
Yeah.
Yeah, so just going back to that, I did do 7%, so I could update that. But that was based on their 2017 forecast as well. They said they're expecting between 5 and 8% increase to earnings per share, which was 344 to 352. So that's where we came up with those numbers. Any questions on this page?
Are you guys okay with the projection, sales and earning per share, Henny and Tom?
Yeah.
Yeah,
Okay,
they seem reasonable. They're above trend. They're above. They don't follow the line though. They're sort of above trend because, you know, the definitely the earnings is flattening out, and the slope of the earnings line is greater than the trend. At least to my eye.
Okay.
This here, you say?
Yeah, you see how it's flattening out?
The pink line.
Yeah.
Yeah.
But you know, that doesn't mean it's wrong. It's kind of like it's increasing.
Okay. All right.
Okay.
Second page.
Yeah. So for PE, just crossed out a couple we felt were outliers here. But it is, so we had, if you kind of go to the high PE, high price that we projected, used an average high PE of 28, even though it was 29 the 5-year average when we remove the outliers. So we want to be a little bit more conservative, and it probably will decrease as the sales and earnings start to slow a little bit. So if anything, this could be a little bit high, but it's still under what they have done in the recent past. And then for the low PE, we chose 17, even though the 5-year average was 19, just again to be a little bit conservative and kind of below where they had been.
I have a question. So
Mhm.
my understanding is that we, use, 1.5 times sales as or is it whatever, 1.5 times the estimates to get to that high PE and max out at 2 times, and this is at 4 times. Is that
Which one? Sorry.
getting the average high PE?
Talking
Okay.
about the PEG ratio?
No, like the average high PE, my understanding was that it should be like 1.5 to 2 times the sales estimates or the growth estimates. And this is 4 times.
So it should be 14 basically, since that's what we're using for the earnings per share growth.
That's just a guideline. But
Okay.
as I mentioned before, if there is a formula that all of us will be billionaire,
I know.
it was just a guidance, I
There
think.
should be some kind of justification for going that
Right.
high. Because if you look at the upside down ratio, Roy would say that's way out of whack.
Let's see.
Yeah.
What's the upside down ratio?
8.2.
Right now,
8.2 is not really out of whack, isn't it? No more than 10 to 1.
Oh, is that?
Well, okay. So 28 may be a little bit high because current P is a 19 and the average P is 24. I may give maybe 26. It's also looking like they are trending down things 2013. Back out a little bit.
Yeah, that's seems fair.
Let's see what that say. Okay. So what's
that's
today's
updated
price at the 60 something?
Yeah,
What's
this is
there?
the one I just updated. 63.54.
63. So we want to double money. Yeah, that's about right. What do you guys think about 26?
Yeah, that's good.
That's fine.
Okay.
Yeah. The only other one I might go lower on is the low PE. I'm not
So
sure what you guys
52
thought about
weeks
that.
price is 61. So you lowered another 10%. For me, okay, can I look at the trend of their low PE? Can you go up a little bit?
Of the low PE?
Yeah, low PE, average, the trend. What did it look like?
Here?
Yeah. Yeah. Okay. So you
Yeah,
gave
so they stay right
17.
around.
Okay.
Yeah.
What do you guys think about the low PE? 17 okay or?
Yeah, I'm good with the 17.
That's
Okay.
fine.
Okay. Yeah.
Yeah.
Okay. Let's take a look at the upside down ratio 7 to 1 and buy, and what's the appreciation? Oh, they also pay dividends. I like that.
Yeah. So yeah, they're about a 1.5% dividend as well right now. And they've been increasing the payout ratio a little bit also. So that's good for further increases.
Okay. What's the return? Can you go down a little bit more?
Yeah. So total return, high PE, 14.6, projected 10.6.
Okay.
It's right here.
Okay. How about 50%?
So it's pretty good.
Give us 10 to 15. Okay. So, okay, what can we take a look at the quarterly data, the last tab?
Yeah. Mm-hmm. You see that? So you can see, yeah, it's slowing quite a bit, which you can see. Definitely not the high growth that they used to have. They've been, as their store base has started to increase, they're still building roughly the same amount of stores, but 100 stores on 1,600 doesn't have the same impact as it did, back here when it was on, 1,000 stores or less.
Wait, what happened? They're closing stores? What do you
No,
mean?
I'm
stores
just saying
less?
they're opening roughly the same amount, but the impact to earnings of opening 100 stores isn't as big as it was,
Oh.
5 years ago, maybe.
Getting back to Hannah's question, how is same-store sales growth?
Yeah, so that was this most recent quarter. They said they're expecting 2.2% decrease in same-store sales in the most recent quarter. Last year, I want to say they were, less than 1%, maybe 1% same-store sales increase for the year of 2016.
How do we look at the 10
If you look at,
Okay, go ahead, Henny.
if you just look at the trend, sales and earnings in this graph that we're looking at, every low point is getting lower. So
Yep.
in both March 13 is a low point, and then 12, 14 is another low point, slightly lower than the previous low point, and then 19 is getting lower. So it seems like they're and then their sales are starting to drop off, like you said, Matt. So I'm not sure what their growth plans are or how they're going to generate more earnings. It seems like they're on a downward trend.
Yeah, that's a good point. It basically is going to depend more on the same-store sales, I think, to your point earlier, which they have a plan. I don't remember all the details of it, but there is some sort of a plan. But yeah, that's where most of their earnings are going to come from. They're going to be much more stable kind of going forward, I would say. Not nearly as much growth.
So their revenue is really from the stores, nothing of online sales. Obviously, you cannot buy pets online.
Right.
Well, you can buy pet food, pet supplies. Amazon sells it.
Really?
Yeah.
Oh, I would like to see my pets before I buy it.
No,
No,
you
no,
can't
no,
really
no,
buy
If we have any
no,
connection.
food
food.
and supplies.
Yeah.
So how do we look 10-year PE chart?
Done more.
Uh-oh, somebody's
What's that?
watching TV. So how do we look at the PE? Anyone knows? I don't know how to look at 10-year PE on the chart from SSG Online.
Yeah, I don't know.
Let's see if Carol's typing any. Yes. Okay. Did you look? Okay. How do we look at 10-year? I know online. Sorry, Tool can look the right below the PE table on valuation tab. Okay. Can you go to the valuation tab? The second
Right below
tab.
the PE, what was it?
Oh, I know where it is. Can you click the valuation, the second tab, the middle tab?
Yep.
Did you see the show high PE ratio chart?
There we go.
Yeah, click that. No, below that, this radio button kind of thing. Show high price. Yeah, there you go. That's the 10-year.
I gotcha.
High and low.
Yeah. So definitely the low is declining, the high a little bit as well, which I would expect that as there's not as much growth, right? You would think that would get quite a bit
Doesn't look
lower.
like it's changing them dramatically.
Yeah.
Relatively flat. I mean, coming out of the since the recession, since 2012, it hasn't been too much different.
Right. Just kind of for comparison, I looked at Target because they're doing so bad right now, and they're at about 11.5 PE. So that's kind of a worst case scenario, I think, from a low perspective. And we're using 17 right now. So
yeah. Okay, we need to wrap up. So do we have a motion? So what do you guys think? Do we have any motion? I have to say,
I personally don't feel good about either one.
yeah, I have to say though, this company is good, but unfortunately, it's not a direct competitor of 5. I would like to see the competitor of this tractor company, you know, like a Paco or some, I don't know if it's Paco is public traded company, you know, to see how does this industry doing. So, but do we have a motion?
Yeah.
No motion?
Yeah. I'm not enthusiastic. You know, I'm not real happy about 5, but I'm not impressed by Tractor Supply either.
So shall we just hold 5 on hold? Oh, okay. What's our final recommendation,
Yep.
Joanne, on 5? What's your final recommendation?
It's a hold,
Okay. You recommend us to hold?
or sell. I mean, or have a challenge. I wouldn't
Okay.
sell it without having, replacement.
Did you guys look at Alta? Is
Yes.
Alta looking good?
No, it's
Mhm.
Oh, okay.
way overpriced.
Okay, overpriced.
And we looked at Dollar Tree, Dollar General, Walmart,
Yeah. Mhm.
Target. I
The
mean,
whole
Mm.
the whole retail industry is just doing really bad right now. So, I mean, I don't know if it is. Do we have to be in the retail industry or?
No, because we have this 5 in retail. If we want to, I guess we don't have to. Do we have to challenge it 5, or would you say we sell it by something else?
well,
Just
I think, can we just go consumer cyclical? I mean, or do we go down to the industry?
just by Amazon.
No, Amazon. I know Amazon sounds good, but the fundamentals just look horrible. Okay, another thought I had. Anybody watched and attended the Ken Kavula's price line? How does price line look? It's also overpriced because I missed it. That stock up. I guess nobody.
I think it was a hold.
It's a hold. Okay.
It was a hold.
Okay.
Yeah.
Uh,
It was a hold, but he said that it was 1-to-1 ratio. But he said for a large company that's got very, very good fundamentals, if we want to hold a large company, he said that's not a bad one, even though it's a 1.7 to 1,
okay.
just because of the fundamentals on it.
Okay. So we have no motion then for today's company. And next month, Jane and I are going to do a stock study. Do you guys want us to look into retail, challenging 5, or I'm thinking about to totally find a different industry. I'm thinking to look into bank. I took what I learned from Ross Meredith. I kind of want to practice.
Yeah. I think you should do that. And
Okay.
then the next time, I really want to. Has anybody looked at PayPal?
I did.
What do you think? Is it worth?
I think, I don't know. It's kind of new. They don't have a history. Do they have a 5 years of a history?
Well, they're from eBay. It's a spinoff.
Oh, is that? Okay.
They've been around.
I looked at, I think there was an article on Barron's a while back recommended a PayPal. That's why I looked. I think I was okay. They tried to make money out of the fees, but
Yeah, they do
so
fees.
do you want me to look at PayPal? Or do you want me to look at bank?
No, you look
for
at
next
bank.
month?
You look at
Okay.
bank. Yeah.
Okay. So, all right, next month, Jay and I are going to study bank industry. And now back to, so we have no motion, no buy, no sell. Unless you guys want to buy something else, and when during the vote, we have a $3,000. We can buy any other stocks that you think the club should buy. So new business, very quick. New term of for this administration team supposed to end next month, I believe. Next month is our 1-year anniversary. But the current administrative team has decided they're going to take on another year because we finally, from toddler to start walking. And however, we like to encourage all of us to think about what we will encourage you to take a position. So we would like we can work with you to shadow any of the positions that you are interested. It can be president, vice president, secretary, treasurer. In our agreement, it is spelled out what are responsibilities for each of the officers. So you can email me or email the executive team to let us know what role you like to take on or be shadowed.
And I just want to say that you won't ever be on your own. You'll always have support.
Yes.
Like when we first start out, we'll work as a team.
We always work as a team in our club, even stock studies. We always work as a team. Okay. For club membership dues, there are no club dues. We have to thank Matt, Barry, and Jane. So the club membership got waived. We only need to pay individual club membership, the basic ones, $41, which we all got paid. It's all good. Good to go. Next item on the PERT annual report. So Joanne already talked about the 5. Next month, there's lots of quarter report comes in: Biogen, IPGP, CVS, Disney, LKQ, Skyworks. So we have a quarter report to file. 3 minutes of each. Please remember to submit 1 week before the meeting. So for everybody for the other members to review. Discussion of a possible buy or sell actions. Is there any motion to buy any other companies at this moment? Anyone's interested to buy more CVS? Because CVS, I believe, is getting a buy. No, okay. So we just keep the money what? Buy what? By SCHB?
And you know what? And I think we need to develop a strategy for what to do with our cash. Like if we propose more, we can have a bigger team next time proposing more stocks to invest in, then rather than just, maybe I don't know. Well, but we have a lot of quarterly reports, so that's not a good.
Quarter reports very quick, 3 minutes of each. How about create an agenda to discuss what do we do with the cash?
Okay.
Okay. So next, our meeting next month is May 15th. Now I'm going to open the mic to our guests. We have 4 guests. I'm going to start from the top. Amy, I don't know when Amy joined us. So how do we open mic for the guests? Do I just click one by one? Excuse me for a second. Amy, Carol, we need your help. Okay, unmute.
Muted.
Carol, how do I unmute all the guests? Is Carol there? I'll click on mic. I did. Didn't do any. Okay, let me click Annie. Okay, go ahead. Annie Bliss, can you talk? Hey, Annie, is your mic working? Annie? No questions. She said she had no questions. Bernard has a couple questions. How to see portfolio? I responded. I don't know if you mean our club portfolio, Bernard? Oh, let me click the mic for him. Okay, oops. Okay, go ahead, Bernard.
Yeah, the club portfolio. How to see it? I could never, and print it maybe. You can't study it if you don't know it.
Oh, I mean our club portfolio?
Yes.
Okay, our club portfolio belongs to the club.
Unmuted.
You can see when you join the club, but the meetings open to all guests, but there are only certain files we open to guests. For example, the guests can see our meeting agendas, can read our annual or quarter reports, just read only. But for club portfolio, at this point, we don't share with our guests. You can see only at the meeting.
Oh.
Yes.
Because I was going to study stocks, but I don't know what stocks. Now, another thing, how do you join?
Okay. Are you a BI Better Investing member?
I am a lifetime Better Investing member.
Excellent, Bernard. So I respond back to you. I said, anyone who is interested in our club, you can join. However, we ask our guests to observe 2 consecutive meetings and participate 1 stock study with us. Because the reason why we're doing that, our club, we don't take any personal contribution. We invest in hypothetical money, $1,000 each month for tracking. So we just want to make sure we meet your expectations. This is how we do stock studies. We work as a team, but also we want to kind of make sure that you can commit to us. If it's your turn to do stock studies, you will do it to pair with another person. If it's your turn to do education topic, you will do it. So after all that, you're still interested in our club, you can join us.
Okay.
So today is your first time to attending our meeting, correct?
Yes.
So next time, next month, then you just observe the meeting again to see our meeting still meet your expectations. You still like how we conduct our meetings. What do you think about our meeting?
Okay, fine. So you don't, there will be no money in, so there's no tax thing or anything.
Yes,
It's
nothing.
just,
Yeah.
oh,
Because
okay.
our club goal is for educational purposes. All of us have our own portfolio. So
Yes.
we take what we learned, we just manage
Okay.
our own portfolio. So as club, we have this portfolio, but only for tracking purposes. So each member still will follow a stock. The
Yeah.
stocks the club decide to buy.
Well, it sounds interesting to me. I have a website. I'm a heavy duty investor myself.
Okay,
And
great.
maybe if I could email you, I could send you more information. I don't know.
Sure.
But I
Okay,
don't, I hate to ask for email address, but I don't,
yes,
how would I do
I
that?
will email you. I know your email and I will email you information. I also will share with you our club agreement, you know, how our club operates, have a little bit more detailed information. And I will send you an email right after the meeting. And
Well,
then
that's
you,
fabulous. That's fabulous.
okay, and then you and I can communicate.
Yeah, I've always liked the better investing long-term approach. It's
Yes,
one of the best.
yes.
So I look forward to learning and working. Thank you.
Okay, excellent.
I'm
Well, thank
Bernard.
you.
What's your name?
My name's Jay
Jay.
Eagleson. Yes,
Nice to
Jay.
meet you, Jay.
Nice
Thanks.
meeting you too, Bernard. Are you based in Sacramento?
I'm in Sacramento.
Okay. We have members from Canada, Asia, and Ohio, everywhere since we're online meeting. So just
Oh,
so
okay.
you
And
know.
in fact, I know Roy Chastain.
Yes, Roy is. He's traveling today to Middle East. That's why he's not here today.
Yeah.
Okay.
Well,
How
Jay,
did you hear from us, Bernard? How did you hear about us?
well, I get emails from Better Investing.
Oh, got it. Okay.
And from time to time, I've gone to their online webinars and I find them very good, very good.
Yes, they are.
And
Okay.
so today I went to this one and I think it's very good. Thank you.
Yes, thank you for attending. Okay, next, Tom. Do you have any questions or comments? Your mic is unmute. Tom, Gary Bay. You can also type if you want. Tom? Okay, Tom is not speaking. Maybe his mic is not working. Well, Bernard, at least your mic is working, so we know.
Yes.
Yeah, we test out that your computer is working for using a GoToWebinar. Okay.
Yeah.
So excellent. Okay. We don't have anything on our meeting agenda, so I will call the meeting adjourned. Meeting adjourned at the 7:38. Sorry, we went over